Okay, good afternoon, everyone. Thank you for joining us. I'm so sorry we didn't get a chance to meet with you personally and do exit counseling in person this year, given the early graduation. And congratulations to everyone. I know it's not the circumstances you wanted to graduate under, but thank you all for stepping up and graduating early and helping us all out. What we are planning to do today, and I'm Sean Morrissey, Director of Financial Aid. We also have Jennifer Sheehy, our Associate Director, and we'll be going over some information that I hope we're going to find useful. We're going to be going over frequently asked questions, some new guidance that has come out with some new regulations due to COVID-19, and some next steps that you may wish to take with your loans. We're also going to leave a lot of room for questions at the end of the session. If you would please type your questions in the chat box, and we'll try to get to all of those as much as we can. And also, there may be some information that you don't want to share publicly. If you want to set up a meeting time with either Jen or myself after this over the next week or so, we can certainly do that for you and speak with you privately about your own situation. So with that, I'm going to hand it over to Jen.
All right, I think you have the progressing the slide power, or do I? Here we go. Okay, so there is a lot that is encompassed within the CARES Act, but we wanted to kind of distill it down to the main bullet points that are going to affect you specifically as recent graduates, and specifically in regards to financial aid. So the two big elements of the CARES Act that will affect you are from now through September 30th. So essentially for the next 6 months, all federal loans are going to have a 0% interest rate. So for the next 6 months, there won't be any interest accruing on your loans, which obviously over the life of your loans is going to save you considerable money. So that's a great thing. Additionally, all federal loans that would have been in repayment are automatically being put into forbearance, meaning you don't have to make payments on them. That said, all of your federal direct unsubsidized Stafford loans, which the majority of you probably have borrowed, assuming you've signed up for this webinar, those loans already have a 6-month grace period. So that grace period will have begun when you graduated. You wouldn't have begun repayment on those loans until September anyway. So really the only effect you would see with that second bullet point is in regards to federal direct Grad Plus loans. So if you had borrowed Grad Plus loans, they generally have a 60-day grace period before you would begin repayment, but you did have the option to defer while you were in school. I'm assuming the majority of you probably did. So those loans would be affected by this and would be in forbearance for the next 6 months. So at least you'll get that benefit if you have any Grad Plus loan funding.
Okay, and we're going to be going over some frequently asked questions. So first, does your grace period begin earlier due to early graduation? Yes, graduating May 31st. May 31st is your graduation date. That's also your separation date. That's when your grace period will begin. And the grace period is something that you can not forego. So if you are thinking about trying to go into repayment early in order to take advantage of public service loan forgiveness, you can't select to be in an income-based repayment plan until after your grace period is over. The only way for you to elect to end your grace period is to consolidate your loans. If you do begin a loan consolidation, that ends your grace period right away, and you can go into loan repayment immediately. And the reason you may want to take advantage of that now, if you are planning to do public service loan forgiveness, is that with the 0 interest and the 0 payments until September 30th, those 0 payments till September 30th, if you are enrolled in an income-based repayment plan, do count towards the 10 years of payments towards public service loan forgiveness. So if you were to be able to forego your grace period and begin in an income-based repayment plan immediately, then you would be able to begin working towards public service loan forgiveness. And we'll be talking a little bit more about public service loan forgiveness in just a few minutes, but I wanted to make that caveat for you. Also, with the learning contract, how long is the grace period for the learning contract? So if you're not going into residency, there's a 6-month grace period on the learning contract. Most of you are going right into your residency, and that would mean that you have 1 year interest-free on your learning contract during your first year of residency. You do have to fill out paperwork to forbear that loan during your first year of residency. Once you do that, it automatically is payment free for the first year and interest free for the first year. We'll be sending out information about the learning contract and repayment of that over the next couple of weeks. With the quick graduation, we weren't able to get that all together to you as quickly as we would hope, but we're going to be getting you a lot of great information about the learning contract over the next couple of weeks. Also, can you switch between repayment plans? So if you choose a repayment plan during residency and then you want to change into a different repayment plan after residency, you can do that whenever you like. The caveat being, if you are taking advantage of the either 20 or 25 years without doing public service loan forgiveness, if you are going out 20, 25 years and having some forgiveness at the end of that, if you switch between repayment plans, you do start the clock over on those 20 or 25 year repayments. If you are doing public service loan forgiveness, as long as you're in one of the eligible plans for public service loan forgiveness, the clock doesn't restart on that. So if you are in a couple of different repayment plans over the course of seeking public service loan forgiveness, you just have to do 10 years total. It doesn't have to be 10 years in just one repayment plan. And how long is the grace period for your other loans? I'm going to go to the next slide for you on that so I can show you that. So you see here, your direct loans have a 6-month grace period. Your direct plus loans have a 6-month post-enrollment deferment, but they do not have a grace period. A consolidated loan has no grace period, as I was saying earlier. So if you wish to forego your grace period, you would have to consolidate, and then you have no grace period. If you have Perkins loans, there's a 9-month grace period on that. You will also have 0 interest accruing on your Perkins loan for the next 6 months as well on the Perkins loan, but you are in grace already, so you would have had that not accruing anyway. For the primary care loan and loan for disadvantaged students, if you have either of those, there's a 1-year grace on those. And for the institutional loans, that's the learning contract. I just spoke about what those are. For your private loans, you have to speak with the lender that you had your private loan with to see if there is any grace period on that. In most cases, there aren't grace periods on that, but some private loans are making special arrangements right now due to COVID-19 that they're changing some of their policies. So please reach out to your lender if you do have private loans.
Yeah.
Okay, consolidation. This is a topic that we get a lot of questions on. Should I consolidate? We've touched on this just a bit here a second ago, but consolidation is nice if you want to forego the grace period to really take advantage of public service loan forgiveness and getting going on that right now. If you're able to make $0 a month payments, those, like Sean said, those months do count towards public service loan forgiveness. So if you consolidate now, you can start, chipping away at those, that requirement, right away. The other benefit to consolidation, or other students that we might recommend this to, is if you have several different federal loans with different servicers. So the majority, if not all of you, your federal direct unsubsidized loan, if you have any subsidized Stafford loans left over from undergrad, and if you've borrowed grad plus loans, those are all going to be serviced through the same servicer. But if you borrowed Perkins loan funding or LDS loans, those have different servicers. So if you can go through the federal direct loan consolidation process, you can wrap all of those loans under one servicer and one payment. So those are the two main benefits to consolidation and things to take into account if either of these situations apply to you.
Also, if you do have Perkins or LDS, in order to make those eligible for public service loan forgiveness, they do have to be consolidated.
Thank you.
Those
Yes, I meant to mention that.
without consolidating them. So if you do not consolidate those would not be eligible for public service loan forgiveness.
Yeah. Okay, so this is a chart that is available on the AAMC's website. They have a ton of really great resources out there. I definitely recommend checking out their first website, the first portion of their website, which is really all in regards to financial aid, the best practices for repaying your loans, money management, etc. It's a really great resource that's free for you to use. This is part of a larger chart that goes through every single federal repayment plan, and there are a bunch, but we've narrowed it down to the three that the majority of our students are enrolling in. So these are the main income-driven repayment plans. So there's IBR, pay, and repay. A few of the main differences between them, I'll say, and I would definitely recommend that you go onto the AAMC's site and use their MedLoans Organizer and Calculator, which will break down all of the monthly payments specific to you, your income, your borrowing. So that'll allow you to kind of see financially which ones might be the best fit for you. But in terms of some of the kind of caveats that make them different, I just want to point out with the pay, so the IBR and the pay are very similar. The main difference is with the pay, the capitalized interest cannot exceed 10% of the original loan balance. Both of the pay and IBR are set up for 20 years. So if you're not doing public service loan forgiveness, you'll pay for 20 years, and any remaining loan balance that you've not paid off would at that point be forgiven. With both of the pay and IBR, if you're married but file your taxes separately, then you do not have to, they don't factor in your spouse's income in determining what your monthly payment will be. With the repay, on the other hand, they will factor in your spouse's income regardless of if you are married and file your taxes separately. Repay also has a 25-year loan repayment term. So if you're not doing public service loan forgiveness, you would pay under repay for 25 years. At that point, if there's any balance remaining, that would be forgiven. Repay also doesn't have a monthly cap. So as with IBR and pay, whatever you would have been required to pay under the standard repayment plan is the cap that you'll pay under both of those plans, regardless of how your income increases. So post-residency, if you're making a considerable salary, your monthly payment for both of those plans would still be capped at the standard repayment plan. As with the repay, there is no cap for that. So if you get married to another high earner, say another doctor, your monthly balance due under the repay plan could be considerable and could certainly be more than you would have paid under standard repayment. But one of the big differences with repay that a lot of our students are focused on, especially during residency when they're making smaller payments, is that with repay, if your monthly payment isn't enough to cover the interest, then they're only going to hold you responsible for 50% of the interest that's accrued. So that's a nice benefit. And we do see some students that perhaps will start with repay while they're in residency, and then after residency, switch to pay.
Okay, so next steps, as Jen just mentioned a few minutes ago, the AAMC's MedLoans Organizer and Calculator is a great tool to use. If you go to the AAMC.org MLOC, that's going to allow you to upload information about any loans that you may have borrowed, federal loans, and it will bring you through calculations to show you what your payments look like both during residency and after residency under all of those different repayment plans. It's also going to show you what your benefit looks like under public service loan forgiveness if you are planning to pursue that. And it's also going to show you if you have any forgiveness after 20 or 25 years under those other repayment plans. So it's a great tool that lets you see what your payments will look like. It's also good because you can be flexible on that. You can put in there to see what would happen if you were married and adding in a spouse's income on there, changing family size, changing your income that you will have after residency. So you can do it with a lot of different factors to see how that's going to affect your repayment and help you decide on that. So it's a really great tool to use, and that's free of charge. You want to determine whether or not you want to consolidate, and if so, when to consolidate. You should consolidate before you start any payments, because if you start consolidation after you begin making payments, the clock restarts on the loan after it's consolidated because it's considered a completely new loan. So any payments you may have made on the loans before you consolidated will not count towards public service loan forgiveness. They won't count towards any 20 or 25-year clocks under those other payments as well. So make sure if you are planning to consolidate that you do consolidate during your grace period. If you do wish to forego your grace period, consolidate as early as possible. Make sure your contact info is updated with each of your loan servicers. So go onto the website with each of your loan servicer and make sure your contact information is up to date. If that's not up to date, they can't send you information, especially with things changing right now and regulations changing. It's really important for them to be able to contact you because there's a lot of things that may be changing now that you want to keep on top of. You also want to select your repayment plan on your servicer's website. I know that when you did your exit counseling, it did ask you for a repayment plan. That's not locking you into the repayment plan. You actually have to do that with your servicer directly in order to select your repayment plan, and they will allow you to do that during your grace period. And you want to do that quickly after you consolidate. If you are consolidating, you want to make sure that you choose your repayment plan so that you don't go into standard. Whenever you don't select a repayment plan, you go directly into standard repayment. So you want to make sure that you do select a repayment plan. And you also want to make sure that each year that you send in the paperwork to update your income information for your servicer if you are in one of the income-based repayment plans, because if you don't do that, unfortunately, you'll be put right back into standard repayment, and your payments may go up, and you also are switched out of one payment plan into another. Okay,
Yeah,
so
we're kind of right on.
to questions.
Yeah. Let's see.
Please, if you have questions, we'll put it on the chat. So information was set out as quickly as we could to update your enrollment status. And I see that someone did try to consolidate already and the loans were still showing as in-school deferment. How do we update those loans? Please contact me directly. I can go in and update those for you. Information was sent out early last week to update that, but sometimes it takes a while to get from the National Student Loan Data Service to your servicers. So there is a delay there sometimes before they get that updated information.
So I see we have a question about the learning contract. So if you are going into residency, you do get that 6-month grace period before you would either have to begin making payments, or if you plan on doing the service payback after residency, then by the end of that 6 months, you want to make sure you send us the deferment form.
The best way to contact me directly is through my email, which is Shawn, SHAWN, .Morrissey, MORRISSEY, @umassmed.edu, or you can send an email to financialaid@umassmed.edu and ask that be forwarded to me, and you can do that.
And I just threw your email in the chat box in case.
Okay, great.
you missed that.
And there was a question in there that if you consolidate, you don't have to pay until September, and these 6 months still qualify for PSLF. You do have to let your servicer know that you are enrolling in an income-based repayment plan right at the beginning, and then that's correct, you don't have to make payments, and those will qualify for PSLF. You want to make sure you're not in forbearance for that period, because if you are in forbearance, then those will not count. So as long as you are in an income-based repayment program and not making those payments based on the CARES Act, then those will count towards public service loan forgiveness. There's a question, is there any downside to consolidation if you're planning on doing PSLF? The only downside to consolidation, if you don't have to do so otherwise, like if you don't have a Perkins or you don't have loans that don't qualify, if you're just trying to do it early to take advantage of the 6 months non-payment, is that your interest rate may go up a little bit. So when you do consolidate, they take a weighted average of all the interest rates that you are consolidating, and they add 1/8% to that. So it does raise your interest rate a little bit, but it's not, I don't believe it's enough that it's going to change the benefits that you're receiving to getting 6 months extra of 0 payments towards public service loan forgiveness if you are doing public service loan forgiveness.
I see a question about the $0 a month payments. If that's what's determined your monthly payment will be, is the interest still accruing for that year that you don't pay? The interest, because of the CARES Act, the interest is not going to be accruing through September 30th. But after September, at least the way the rules are standing now, after September 30th, the interest will begin accruing even though you're not making payments.
For IBR and pay as you earn, being a new borrower before a certain date, that's for any direct loans that you have. So undergrad loans do affect your ability to qualify for those. So if you did have loans before those dates, those do not qualify for IBR and pay as you earn as a new borrower.
We are recording this presentation.
And we will make that available.
And like we mentioned earlier in the presentation, this may have been someone that came in a little late. The grace period does start earlier. So the grace period begins as soon as you are considered a graduated student, you're no longer matriculated. And so based on the earlier graduation rate, the graduation date of about 2 months earlier, your grace period did start about 2 months earlier than it normally would have. Yes. So we had a question about consolidation, if all of your loans are under the same servicer. So if you don't have any Perkins loan funding or any LDS loans, then if your loans are, all your federal loans are through the same servicer, then the main benefit to consolidation for you, if you were considering this, would be if you wanted to really take advantage of public service loan forgiveness and complete it as quickly as possible. Because if you consolidate now, that is a way to forfeit the grace period and get that clock ticking on months towards PSLF now. So that would be the main benefit.
And just a point of clarification, I know a lot of you are working before your residency now, and in order for your work to qualify for public service loan forgiveness, you have to be considered a regular employee. I don't know what you are considered right now with the university, if you are a regular employee or not, if you're receiving a W-2 or a 1099 at the end of the year. You do have to receive a W-2 and be considered a regular employee for those service months to be considered towards public service loan forgiveness. So that's an important question to ask of your residency directors or where you're working now to make sure that those payments will qualify, the service will qualify towards that, and you're not consolidating to forego your grace period and then you're not in work that's considered eligible towards public service loan forgiveness, because I wouldn't want to see you forego your grace period if that isn't qualifying right now. And I'm sorry, I don't know the details of what your employment is considered right now.
Yeah, so I would recommend speaking with the coordinator and see what you are considered as an employee, if it would qualify for public service loan forgiveness. And if it doesn't, then you may want to wait until June or July when you're actually beginning your residency so that you can get a couple months at least of still being in forbearance. And then once you are a qualifying employer, then you can consolidate and begin making your payments.
Are there other questions?
Oh, Sean, I see another learning contract question. I know you're more the expert on the learning contract.
So the learning contract does begin as of 3/31 as well. And if you're entering residency, you have a 1 year period that you don't have to make payments on that loan, and it's interest free. Because this is a whole different year, we will have that for your full first year of residency. It will be interest free. You won't have to do interest. So you're going to get a little bit extra on your learning contract. That is an institutional loan. So the period between 3/31 and when your residency begins, you're just going to be in a deferment period automatically for that. And we're not going to expect any payment, and no interest will be accruing on that. And then we'll allow you your full first year of residency before interest begins to accrue. So we're not going to make that start accruing interest on March 31st on that for you. We'll give you your full first year of residency before interest accrues, just as if you would have graduated on time.
So there's a question about being considered a new borrower. So if you had undergrad loans, prior to 2010, in this example, as long as those loans were paid off, and then you enrolled in 2014, at that point you would be considered a new borrower. So it's only if those loans that you took out prior to, what was it, 2007, Sean? Is that the date? I think it's for the IBR.
2014.
14. So if you had any loan balance prior to 2014 that was not paid off, then you would not be considered a new borrower. So if you did pay off your undergrad loans before you started grad school, then you would again be considered a new borrower.
That's correct. So you do have to recertify in the pay plan each year, but you don't have to continue to show financial hardship each year. You only have to show financial hardship to enter the plan, even though you have to recertify each year so that they can determine what your payment is. You're not going to have to show financial hardship each year. So you can stay in that plan even after residency, as long as you don't fall out of that plan. By falling out of that plan, the way that you would fall out of that is if you don't recertify each year, then they would put you back into standard repayment, and then you would have to re-enroll in the pay plan. And then if you have to re-enroll, you do have to show financial hardship. So as long as you're on time with your recertification each year, you won't have to show financial hardship after the first time that you enroll in that plan. For the LDS loan, the grace period is 12 months on that. Do we have any other questions? If you're not sure if you're going to qualify for a PSLF for 10 years total, would it be financially smart to consolidate and enter repayment earlier? If you're not sure what you're doing, but you think you may be going into PSLF, you may want to consolidate and enter repayment if you think that's a possibility and it's going to give you a good benefit. The nice thing right now about entering repayment early is with the zero interest and zero payments until September 30th. That's like a quasi grace period anyway. So if you forego your grace period, you're not losing any benefit this year, which is unique. So you're in a unique situation where it's kind of still okay to go into repayment early if you're not sure what you're doing through consolidation, because you're not losing anything, because there are zero payments and zero interest during that same 6 months that you would have been in grace period anyway. So it still may benefit you if you are planning to do PSLF, but you're not sure if you're going to qualify. If you do qualify, it will help you out. If you don't qualify, it shouldn't hurt you at this point, except for that little bit higher interest rate on the consolidation loan. And yes, the LDS grace will begin on 3/31.
It's a question about refinancing the learning contract. So if you are not planning on doing the service payback, if you know it's not in my plans to return to Massachusetts after completing my residency, or you know that you may return to Mass, but you're going to be working in a specialty, we do have students that consider refinancing the learning contract in an opportunity to get a lower interest rate through a private lender. You can wait until after the grace period is over, take advantage of the no interest and then capitalize, excuse me, at and then refinance at the end of the grace period. You can refinance at any point through the life of the loan if you decide.
So the interest that's forgiven under repay. So what happens with the interest that on repay is 50% of the interest that accrues above what your monthly payment is forgiven and not added to the loan. So for example, what happens is if the interest accruing on your loan every month is $300 and your payment under repay is $250, $50 above your payment is lower than what the interest is accruing on the loan. So $25 a month will be forgiven on that loan. So your loan will only accrue that $25 extra on that loan.
Let's see. So should we, just to play it safe, should we wait until July 1st to reconsolidate if you plan on doing PSLF, just to ensure that you're working at a qualified employer and those months will count? You can, if you'd like. I mean, you could also, like I said, speak to your supervisor and see if you're volunteering at UMass Memorial now, see what your status is. But I mean, if we're really talking only a few months. So if you'd rather play it safe and wait until July to consolidate, you can certainly do that. And then at least during your residency that those months will count.
There's a question here about, you've heard PSLF can be very difficult to actually qualify after 10 years, and people lose it during paperwork technicalities. So that's true that people have had a lot of difficulties qualifying. The first people that were able to qualify for PSLF happened over the last 2 years. And so they were in the system really early, before any of the systems were set up to help people make sure that they were doing what they were supposed to with PSLF. A lot of that has improved now, and what I recommend that you do is make sure that you send in your paperwork each year showing that you wish to pursue public service loan forgiveness. And you would do that, you can do that right at studentloans.gov. You can get the paperwork about the qualified service, and you have that filled out by your employer each year, showing that you did have qualifying work for that last year. Each year when you turn that in, you'll receive communication from the federal servicer showing that you have completed a year of service, and they will also show you that you've made qualified payments for that. So you'll be in the system and you'll have that for your records, and that should make it pretty clear for you that you are pursuing that. Just to be clear, that you don't have to declare that you're in public service loan forgiveness. You just have to make the payments and do the work for that, and submit the paperwork at the end of the 10 years showing that you've done the public service loan forgiveness. That's where people run into problems, because they wait until the very end to give in the paperwork. So I recommend that you do that every year, send in the paperwork showing that you're doing the service, so that you don't have to go back and create that at the end of 10 years. Because unfortunately, if you wait too long with that, a lot of human resource departments at your employers may not have those records anymore. And that's what a lot of students ran into, is where they were trying to recreate their employment history after a period where they were no longer available to you.
Here's a question about beginning residency under the repay plan, and then at the end of their residency switching to pay, but doing so right before they finish their residency and are then working post-residency before their salary increases. yeah, if your plan is to stay in pay in the long term, but you want to, while you're in residency, making smaller payments, take advantage of that 50% interest subsidy. That's a great way to manage it. Be on repay while you're in residency, take advantage of that 50% discount, and then at the end of your residency, while you're still showing a financial hardship, switch over to pay where you're protected with the not having to report your spouse's income. You have only a 20-year repayment plan if you're not doing PSLF, so that could be a good way to manage it.
There's a question: if PSLF gets removed by the government in the next couple of years, will you be grandfathered into the program through your NPNs? That is a legal agreement that you filled out, the master promissory note. So they shouldn't be able to take that away from you. And all that I've heard is that any legislation that's out there trying to end public service loan forgiveness or to cap the benefit would be for new borrowers, meaning not you. So for borrowers in the future. So you would be grandfathered in under all of those plans. So everything that I know, that you should be grandfathered into that program, and that shouldn't go away for you. And no, you don't need to sign up for PSLF. There is actually no mechanism to sign up and say that you are in a PSLF program. What you can do is fill out the paperwork each year that says you are doing qualifying work to PSLF. And you should do that at the end of each of your years in residency, and then each of the years in your job after residency. You should do that annually. Once you do that, if you aren't with Fed Loans as your servicer, it is going to switch you over to Fed Loans. So if you do end up sending in the paperwork for PSLF employment showing that you did do a year of service, just be aware that your servicer will be switched if you aren't with Fed Loans. And once your servicer is switched, you want to make sure that you're enrolled properly in the same repayment program that you were in your prior servicer as well.
Let's see. There's a question about when to submit that paperwork: at the start of your residency, or do you wait until you finished your first year? It really doesn't matter. There's no deadline that you have to meet. So it really doesn't matter, as long as I would just recommend doing it at the same time every year, so it kind of gets ingrained into your brain and you don't accidentally skip a year. So maybe you do it every year when you're filing your taxes. Maybe you do it at the end of every calendar year, just as long as you're doing it once a year on a regular basis, so you don't, inadvertently skip a year.
And just to be clear, you really can't submit it at the beginning of your residency because you will not have done any service at that point. What the paperwork says is that you've performed service for so many months. So at the beginning of your residency, you will not have been able to show that you've done service at that point. At the beginning of your residency, you will want to submit paperwork for any qualified service you may have done between graduation and your residency this year, because it is a special circumstance this year. So if your residency is not at the same place where you're doing service now, then you want to submit that as soon as you end that service. And when you switch between repayment plans, does the loan lifetime of 20-25 years start back from the beginning? Yes, when you are switching between payment plans, the 20-25 years towards completing repayment under each of those repayment plans does restart once you switch on those. If you are doing public service loan forgiveness, that clock does not restart. It can be under any of the qualifying plans, but if you are going past public service loan forgiveness, not doing public service loan forgiveness, then your clock does restart with the 20 or 25 years.
Let's see, there's a question about, do we need to document the $0 a month payments towards PSLF between now and September, or will that be automatic? Those $0 a month payments really are towards PSLF are only counting if you are actively in repayment. So those months would only count if you've consolidated and are working at an eligible employer. So if you don't consolidate, if you leave your loans in their grace period from now through September when the grace period expires, then those months do not count. You're not actively in repayment and working towards PSLF.
So in order for your work to be considered towards public service loan forgiveness, you do have to be working full-time at an eligible employer. So if you're not meeting those qualifications, then those months will not count towards public service loan forgiveness.
Not seeing any other questions at this point. We do have about 15 minutes left for what we set aside for this. I don't know if there's any last minute questions anyone wants to squeeze in.
And please, if you have any questions while you're going through any of these processes, or you want to set up a meeting to talk with either Jen or myself privately, please send us an email and we'll be happy to do that for you.
So again, we don't know what the status is if you're working here at UMass before you actually start your residency. We are not sure of what your status as an employee is. So that's something that I would recommend, speaking with the site coordinator, and they should be able to clarify that. Does the time for PSLF have to be consecutive, or can you break it into eligible employment? So it does not have to be consecutive, but if you switch jobs and there's a period of time where you're working for a company that is not a nonprofit, then those months would not count. But if you then go back to working for another nonprofit company, the clock would pick back up again. Ooh, the IRS's website does have a great search tool that you can use to see if a company qualifies as a nonprofit employer. So if you go onto the irs.gov's website, they have a tool where you can search by state, by the name of the company, and they will tell you whether or not they have filed what's called a 501c3. So that is confirming through the IRS their tax exempt status. So you could either speak to like the HR representative or your supervisor, or look on the IRS's website, or a combination of all three just to play it safe, to know whether or not they qualify as a nonprofit company.
There's a question that if you sign up for a repayment plan for 20 years but pay the loan ahead in 10 years, will you end up paying the interest for 20 years, or will it only be the interest for 10 years? So if you pay off your loan early, then your interest only accrues for that period that you're paying. So if you pay that off in 10 years, that other 10 years of interest will not have accrued. So anytime that you can pay off your loan earlier, as long as you're not looking for forgiveness, then you are earning less. There'll be less interest accruing on that.
I haven't heard of this CARES Act element that includes $5,000 towards student loan payments. I haven't heard anything about that. Sean, have you?
I have not either. New things are coming out all the time about that. I will look into that, and if I have any information on that, I will email that around to everyone in the class.
So there's a question about if you're planning on pursuing PSLF and you have $0 a month payment, but you can afford to throw some money at it, should you? That's really going to be a personal preference. If you feel more comfortable having that safeguard in case you don't ultimately end up pursuing PSLF after residency, then yeah, that could be a good idea. I mean, if you do end up pursuing PSLF, then you paid when you didn't have to. But if at the end of the day, that's going to make you sleep better and to know that you're protected in case you don't go down that route, because it's hard to decide now and plan out now what your life is going to be for the next 10 years. That's certainly an option, and there's no harm to doing that.
And another approach that you could think about is you could put those payments that you think you can make into a savings account and put that aside, so that if PSLF doesn't work out for you, you do have a lump sum of money that you can put towards your loan at that point. I know some interest will have accrued on that loan, but at least you'll have that money aside in a separate place. And if public service loan forgiveness does work out for you, you won't have lost those payments entirely. The consolidation process usually takes about 30 days. So you want to start that 30 days before you wish to have that take place. Sometimes it's a lot quicker than that, but other times it does take 30 days. So you want to start that at least 30 days before it's needed. Any other questions? Okay, if there are no other questions, I hope you found this useful, and please reach out to us if you have additional questions. We're here to help you through this process. I know there's a lot of unknown right now, and things may still be changing in the next couple of months. We'll try to get information out to everyone as much as we possibly can, and help you through this whole process. And please stay healthy and stay safe. Thank you all for what you're doing right now. It's amazing to me that you're all stepping up and doing this.
Absolutely. All right. Thank you, everybody.